Our next guest is saying the recent Reddit trade is, quote, the messy middle of a revolution. Early Robinhood investor and Inside.com founder Jason Calacanis joins us now. Jason, what a story. What an investment for you, I'm sure. You say you were off skiing, but now you're back paying attention to this story. Now, first, there's a conspiracy theory advanced without evidence by Tyler Winklevoss on this show yesterday that political leaders forced Robinhood to stop the buying yesterday. Is that what happened?
Yeah, I have no information on that. And, good luck with the Winklevoss twins and trading Bitcoin. They're total heroes to me. So I'm joking. I don't know that they know what they're talking about. So I would disregard whatever they say. But it is certainly an interesting turn of events. And yes, that's a blizzard behind me. And this is just actually tipped over into the consciousness of everybody. I mean, on the lift in front of me, people were talking about, should they buy GameStop? I kid you not. and this was like a 15-year-old kid and his parents, and they're talking about GameStop, and they're explaining shorts. And I was like, you know what? This is actually why I invested in Robinhood. This is why Robinhood was formed. Robinhood, and I don't speak for the company. I don't have any inside information. I did not talk to Vlad, although I did see the great hit that Andrew did last night. That was a good get. Congratulations on that. And when they pitched me this idea at Antonio's Nut House in Palo Alto, before the product was launched, Vlad said to me, we want to get millennials to trade stocks. And I said, these are the same people who are totally commitment phobic. They're YOLO. They're on their mom and dad's, Netflix accounts. They don't buy cars. They take Ubers. How are you going to get them to do that? What's the opportunity there? He goes, well, what if we do? What if we do get them to trade? What would that look like? And I said, well, okay, great. I like that idea. It's a new market. And I said, retail's gone. There's no retail investors. He said, Jason, that's the opportunity. I said, okay, I like the way you're talking. Great, keep going. What's the business model? He said, we're going to let them trade for free. And I said, I'm in. This is a great idea. Obviously, that will get people. I mean, this is what my life is. The same pitch as Uber. We're going to, people are going to give up their cars and they're going to use an app.
But tell me,
these crazy ideas work. And
Jason,
and I think, go ahead, John.
Is this free to trade model as we see it now sustainable under these conditions? I mean, how much money is Robinhood going to need in reserve? It's going to have enough to operate when things like we've seen over the past few days happen.
Yeah, and that clearly is the issue here. Clearly, communication wasn't very good yesterday. I think Vlad owned that great. These are growing pains that these big companies go through. Facebook went through 12 of these. Uber went through 17 of these. And I talked to you about every single one of them. Sometimes when you have hyper growth, you have these kind of edge cases. And so they're going to obviously need to have more money on hand. Clearly, I'm not an expert on these regulations and what the covenants are and the coverage needs to be. But this is a great stress test of our financial system. And it's absolutely awesome that young people are on Wall Street bets getting this financial education, because the way to accumulate wealth in the United States is to own equity and equity participation. You cannot win just being, and you can't certainly change your strata in life and move up into another level if you don't have equity participation. It's very hard to do that on income. And so it's great that this education is occurring, but you have to understand, when something hits number one in the App Store, that is a large amount of downloads. So this is as if everybody in the country decided they're going to go to Las Vegas on the same weekend. This is unsustainable. It's unsustainable to onboard all these accounts, I am certain. And it's unsustainable, certainly, to have so many people either trading on margin or doing, puts and calls. This is unprecedented, and I think they're going to need to digest it. And they're not the only ones, are they? Every single broker is having the same issue right now. There's too much participation, and that participation will take time to digest, and we'll get on the other side of it, I'm sure.
Jason, it's Deirdre. You mentioned the interviews that Vlad did last night, and he said in a number of them that Robinhood has restricted trading to protect their customer. Who is Robinhood's customer? Yeah,
I mean, I think ultimately it's those retail investors. If they lose those retail investors, there is no business.
The retail investors, Jason, a customer is someone who pays Robinhood. As you've mentioned a few times, the retail investor does not pay Robinhood. Those are commission-free trades. The customer is actually Wall Street, isn't it? It's the money, it's the market makers who pay for order flow. So how can the business model be let traders trade for free? It's actually making money off of order flow, is it not?
Well, of course, and they're very upfront about that now, and it's been very clear. But some businesses are based on having large audiences that trickle.
Are they? So. Like you said.
Yeah,
they never talk about that. They talk about democratizing trading, and they talk about commission-free trades all the time. We rarely hear them talk about order flow.
I think people understand it. I think it's in all the terms of service, and they've been very clear about it. So, it's very similar to the Facebook situation where you get a free product. If those consumers don't use Facebook, the free product, or Instagram, or Twitter, the free product, or CNBC, the free product, you don't have the ability then to make the money off of that audience, if you will. And so,
okay, but Jason, I know you just brought up
easy
Facebook.
To say that. Yeah, sure. Go ahead.
So there's been a lot of trust lost in Facebook over the last few years. Yeah. So why should traders trust Robinhood if they now know that they're turning around and selling their trades to market makers and perhaps not executing at the best price?
Okay, so number one, they've been clear about with the market makers that's how they make money. Everybody understands that. The second piece is, should they trust them after having turned off trading yesterday? I think they have to rebuild that trust. So I think that these companies, when they go through crises like these, and every big company, whether it's Tesla, whether it's Facebook, whether it's Uber or Airbnb, when somebody trashes an apartment, these new platforms that get to scale, there's always going to be these crisis moments. And the way you can judge the founder is, do they communicate well? And I think Vlad's doing a better job of that. And I think he did a good job last night on CNBC. And I know he'll do a better job tomorrow. And then you asked me the question, let me give the answer, please. And the answer is, they need to earn that trust every day by having a stable, great product that delights users. And whether it was Uber, which took a lot of hits, or Facebook and Instagram, yes, all these platforms have taken hits. They have made mistakes. What I look at as an investor in them is, how do they respond to them? Do they learn from them? And do they get stronger?
Jason, what I'm hearing you say, basically, I mean, I'm less concerned about Robinhood and more concerned about the broader market.
Yeah.
Is that this is
that's the big
classic
issue.
Cyclical... this is a classic cyclical flow of retail into the market, and that it will ebb out as it always does. I don't hear you talking about major structural change or some sort of end of centralized finance, as we know some people have tried to argue on our air.
Yeah, that's a little silly. I think that's the crypto folks going down the crypto rabbit hole, and they think like nobody's going to be in charge of anything and the entire world's going to be on some immutable blockchain that's not controlled by anybody. That's super interesting and a great intellectual argument. It's not very realistic. Sometimes you do need to have central controls, and Bitcoin is a fantastic technology. It does not apply to everything. So they're a little drunk on the distributed finance and all that stuff. I know it's real, but you can't apply it to everything. And what we saw here was these shorts. I mean, I think that's the bigger issue. It's easy to gang up on Robinhood or whoever the lead company is. All due respect, Deirdre, but and they do have a responsibility as the lead company to be the best performing company. And I guarantee you, they will be the best performing company. I've seen this movie before. Putting that aside, the big issue here is, who is shorting this stock? How can you short 130% of a company? I still don't have a great answer for that. That makes no sense. And then have these shorts all covered their position? And then if people are buying the stock now at 20 billion or 30 billion or whatever they wind up buying it at, is there any chance that the company can live up to that? And has the company's fate changed? Have they done a secondary? Have they put $1 billion of this, incredible acceleration in their enterprise value into their coffers? And is there some vision here for how GameStop becomes a $20 billion company? I could see betting on it becoming a $5 billion company,
right.
But
20 is
that's what I'm getting concerned about.
I'm concerned about that too, Jason. And something that I've raised this week is part of the potential, it seems to me, of not just Wall Street bets, but this whole surge that we've seen in consumer interest in finance is handling some of the nuts and bolts too. I mean, equity investing is great, but so is saving. So is budgeting, so is getting those tools and tips together, getting good research together so that the individual retail investor has really deep insight into what's happening with these stocks. Do you think that's going to happen? Is that an angel investing opportunity? And when? How?
It's already happening. I mean, what you're seeing right now between, is young people who have time on their hands, instead of gambling, instead of going to Vegas, instead of going to school and being on Zoom classes and playing video games, they've decided this is a more interesting video game. And you know what? They're learning by doing. And that is the best way to do it. If you don't understand, if you want to learn how to play poker, Just get at a poker table and play the low stakes game.
But that's what I worry about, Jason.
Don't play high stakes, though. That's what we need.
You're saying instead of gambling, and I hope it's instead of gambling, it's harder to do the research versus to be on a ski lift and talk about, should I buy GameStop? It's harder to download a PDF, somebody spent, and figure out a model for selling that, not just to 50 or 500 people, but to 500,000 people. How is this movement, or maybe the kinds of Silicon Valley innovators who brought us Robinhood, how are they going to get us there?
It's already happening. If you just go to Wall Street Bets and you start reading some of these threads, as my bestie Bestie C said on the air on Wednesday when he was going on his tirade on a halftime, I believe, these folks are very sophisticated and they have time on their hands. And collectively, the internet can produce amazing things that individuals cannot. One example of that is the Wikipedia. There is no paid staff, yet they've built the biggest corpus of knowledge in the world ever created, and it's still growing every day, day in and day out.
They're always begging me for money, though.
Yeah, I know. Somebody's got to pay for this stuff, right?
Yeah.
Back to business models. So I think that's what's happening. And they're on Discord servers talking about it. And it's going to be amazing for society. But what they're also doing is they're stress testing all of these crazy hedge fund folks who short stocks and then do all the fear, uncertainty, and doubt, the FUD that they did to poor Tesla, betting against Tesla for years. And I had to come on the air here and say, listen, it's the greatest car in the world. The guy landed 2 rockets at the same time. Why are you shorting this stock? It's so stupid. Shorting Elon Musk is the stupidest thing you could do. This is like shorting Apple, and Steve Jobs.
Not to say that all shorting is bad, though. Chanos shorted, right? Enron. Yeah. We had shorts against the housing bubble. Sometimes the shorts are the heroes. I got questions about what happens when we end up in that situation. But, Jason, I think we got to leave it there.
Thank you for the time. I'm going to get out in that blizzard and hit some runs.
Enjoy those slopes. Jason Calacanis, always great to have you.